Welcome to the Millionaire Journey Podcast. The goal of this podcast is to guide and empower you on your journey towards financial independence. Here's your host, Len Yaney.
Today, my guest is Lauren Brychell with Equity Elevated Consulting. Welcome, Lauren.
Thanks so much, Glenn, for having me.
Yeah, so we met at the Fully Funded conference, and it seemed like everybody was wanting to talk to you about what was going on. And I talked to you at the very end, and I always thought, I was like, I'm going to get her on my podcast so we can talk about what she does. So I'm glad to have you on.
Thank you so much. Yep, I know it's been a couple months since we met there, but that was a great event.
Yeah, and just trying to think of where I was at that moment, but I think we're still in acquisition mode. Now we're in tighten up everything, make sure operations are good, return capital to investor mode now.
Yes, exciting time.
Yeah. So if you could just tell us a little bit about your story.
Sure thing. So, marketing and entrepreneurship background, spent most of my career in the commercial real estate marketing and capital raising space, working with a large self storage operator for about 5 years and getting the opportunity to raise capital from lots of different types of investors, mostly retail, high net worth, some small family offices, and really was able to help build that firm from the ground up on the marketing systems, processes. How do we find investors? How do we figure out who our avatar is side of things? And then decided that there was a niche in the marketplace that other people could benefit from this type of skill set on an individualized basis, where I go in and help them implement inside of their firm, figure all these things out for them instead of just raise capital for them. And that's what I've been doing for just over a year now.
Yeah, definitely. And I can think about all the guys that I know that are, buying real estate, and almost all of it. No, I mean, from the people that I know, it seems like it's a lot of self-taught, which you open yourself up to mistakes. And for us personally as well, like there was one time we were being directed by a commercial banker, and the banker's like, well, you can't refinance this park under the current syndication because of your ownership interest. And it turned into a total disaster, really, is what happened, because we were like, well, the banker was like, well, you need to buy out your partners. And I was like, okay, that sounds like it would make sense. And then so we go into it, and most of the time when people give you their money, they want to see the full deal go full cycle. And when you're trying to buy out your partners, they're like, "What? Why are you trying to buy us out? And what are you trying to get from us?" And then I think up until that point, the incentives became no longer aligned, is what happened in that scenario. And it was a learning experience for us, that it's like, if people give you their money, that it's like they want to see the deal through. Most people, obviously, the other people will let you know when they want their money back.
Yes, that's true.
So tell us some things, like exactly how did you get started? Like as a did you start out as a capital raiser when you first started, or was it just as an intern, or how did that work?
So I started out being hired originally for the marketing side of the business. That's where my degree was. I really had absolutely no experience in real estate, in fundraising, anything like that, sales even. But my former boss saw something in me that said, hey, you would be a great investor relations professional. So he really mentored me and schooled me up to what it would take to be a great capital raiser. And forever grateful that he took the time to do that for me, and went back, did some financial management courses, learned that side of the business so I could really speak intelligently to investors about it and understand the fundamentals myself. And kind of the rest was history there, it was really fun. I feel like I found a niche that I really was passionate about. I love helping investors grow their wealth, educate them on different ways to diversify their portfolios. And so it became a really natural spot for me to go. And I was able to still wear a lot of hats within that business because it was a smaller company at the time. And you do a little marketing, a little bit of capital raising, kind of all in one.
Yeah.
So it was fun.
And it also, the cool thing is, when you come from like a bigger operation, you can learn from the people ahead of you, compared to like somebody like me. Exactly, is like you're learning. I mean, I came from property management world, which is nothing like raising capital, but at the same time, you're definitely going to make mistakes, and that's what I think that somebody like you would be super helpful with. You're avoiding those just like very easily avoided mistakes. You see it and you're like, okay, let's try not to do that. We should not do that. The communication and everything like that.
Absolutely. Yeah. I mean, there are just so many moving parts that go into capital raising, and so many little nuances that can either make or break trust or that relationship building right off the bat that, yeah, unfortunately, a lot of people do make those small mistakes just because they don't know better. And until you really go through that and test it for yourself and look at your numbers and your data, you won't really know. And so it's better to bring in a professional that can help you along the way so you don't let any leads fall through the cracks or ruin any investor relationships just with simple mistakes you just didn't know were wrong.
Yeah. So tell us about when you decided to branch off. Like what was the motivator, or not the motivator, but what was the thing that made you feel that you could leave and also have a book of business to support yourself?
Yeah. So, I traveled a lot around a lot to different masterminds and events and things to raise capital. And I would meet people
Yep.
along the way, a lot of different sponsors, and they would always ask for advice and say, gosh, you've got so much knowledge here. Can you help me out or can you consult
Yeah.
with me? And I was like, no, I can't now because I have a, full-time position. But then I thought about it and I was like, wait a minute, like, where do these folks go? Right? Who do they hire that would help them on an individualized basis, help them implement these things for their firm with their specific avatars? And there really was no clear answer. And so that's when I decided, you know what, let's just try it. I've got, I know a lot of people in the industry. There's clearly a niche here that isn't being filled, and I'm just going to try it out. And it's been really rewarding and fully booked since I launched, which has been awesome.
That's awesome. Yeah. I was thinking about when you said, where do people go? And I could tell you it generally starts with a lawyer, and the lawyer has never raised capital. And then the lawyer tells you how to raise capital after, even though they have not raised capital before.
Yes.
And and then you're like kind of being like, the attorneys we have are phenomenal, but we're like the small fish in a big pond for them. And that they deal with big money, and like when we're just getting through the waters, is trying to figure out where we're going. It's like they're like, yeah, you shouldn't do that. And it's like, okay, what do we do? And then they're like, just not that. And you're like, okay, we won't do that.
Right.
So yeah,
Well, there's
so
so much education out
yeah,
there too that you have to have the time and interest to go down those rabbit hole and figure it all out and piece it together that makes sense for you. And that's the thing, people just don't have the time or they don't have the full investor relations team with experience to really kick that off with. So it's tough. Yeah.
so what would you say the thing is that when you're just getting started with somebody, like we'll just say it's somebody with like a 500 unit portfolio. Like what are the big things that you just start really working on immediately?
Yeah, so depending on their situation, but generally speaking, what we would do is a full ecosystem overhaul. We're going to look at every part of their current capital rates ecosystem, including who are their existing investors, how are they marketing, what types of emails and communications are they sending out? Do they have a CRM and an investor portal that's set up properly and being optimized to its highest and best use? Most of the time, usually not, right? Most of the time, we can tweak a lot of those pieces. We also look at the website, the offering memorandum, making sure those are as good as possible because you're competing against a lot of other people raising capital in the space. You want to make sure that you're putting that best foot forward and understanding what else is in the market that your investors are looking at. So we look at a lot of those aspects. And then starting at that foundation level, we make sure the CRM and the investor portal is running smoothly. We make sure we've got automated drip campaigns going out so your investors are being nurtured in between calls and texts without you having to think about it. Because that's the tough part, right? Smaller teams, smaller portfolios, they don't have time to sit around all day and say, gosh, I haven't talked to John in a couple of weeks. Let me give him a call, right? That's
Yeah,
not top of mind for them.
yeah.
And so it's setting it and forgetting it. So it's being done for them without them having to really lift a lot of fingers other than making the calls, right? After that, we take a look at the marketing side of things, make sure there's consistent posting going on social media channels, consistent, just general marketing emails going out because right now social media is social proof and investors when they're doing due diligence in your firm they want to see they're active online and adding value and talking about the deals they're doing and just engaged, right? So that's important. And then from there we do a lot of investor relations call training and here's how you build that trust with an investor, here's what to do, what not to do. Don't pitch your deal on the first 3 minutes of the call, don't ask for referrals until it's a good time, that type of
Yeah.
thing. And so we go through the whole ecosystem, make sure each piece is functioning properly. And then when everything is looking good, that's when we go out and say, okay, now we're ready to bring in a bunch of leads because we have the foundation to support those leads, right?
Hey guys, if you want to learn more about our deals we're investing in, go to our website and sign up for our free ebook, 10 Reasons Mobile Home Parks Outperform Other Real Estate Investments. We won't spam you. We'll just keep you updated on the podcast and the deals we're working on. Now, back to the show. Yeah, so then there was something that I wanted to do, but I've never done it, is kind of like trying to get a pulse of like where our investors are personally. Like, because a lot of times it's just like, hey, we're offering 9% preferred returns with, this type of split. And it's like sometimes you kind of wonder like, what do the investors really want with their money? Like, how do you figure that out? Like, is there a way to do that, or do you know?
Yeah. So ideally, the way that you would do that is on the intro call with the investor. When
Yeah,
you're getting to know them, getting to know why they're looking for investments. Is it for tax benefits? Is it for cash flow or equity upside? Getting to know what exactly they're looking for to diversify their portfolio with will be really helpful. So when you're on that first call, asking open-ended questions, getting to know, okay, again, what are they looking for? How long have they been investing? Tailor your language to, is this their first indication that they're investing in? And you maybe need to explain things a little bit more and in terms like what is a preferred return? Or if they've invested in 20 deals, you can skip that, right? And speak
yeah,
directly to them about the financials and the terms that they'll already know. So really getting to know them and building that trust and figuring out where they are now and what they're looking for in the future on that first or second call would be the most ideal way to do that. And you might not get that information on the first or second call,
yeah,
or half the time leads don't want to talk, or you're going to go to
yeah,
voicemail every time you call, right? So another way to figure that out is to look at the email data. If you're sending data out on emails, maybe you've got one private debt offering and one traditional equity with a pref and some cash flow. See what they're looking at, see what kind of links they're clicking on. This is where a good CRM comes into place. You're not going to get that data if they're opening specific emails or how many times without that infrastructure in place. And so taking a look at the data, and then maybe even every 6 months to a year, send a pull out to the entire investor database. Are you still looking for deals? What types of deals? In how many months are you looking to invest? What kind of in what kind of deal interests you right now for your specific portfolio? Why not, right?
yeah, yeah. Awesome. Yeah, that's been that. I've been wanting to do that for a little bit. And I've just never like. I'm just. We're in the mode of just managing operations, and I think we're going to be very successful this year. Last year we gained about 300 units,
So
and from 350 to 650. So it's a big jump, and but at the same time, I think it's even better to manage your properties effectively. so
absolutely.
so it's like, do we? It's what do you? Oh, here's a good question. So I'll have investors reach out, and we're not into acquisition mode. Like, how do you take care of those investors? Like, because I've been like thinking, I'm like, what do I do? I was like, I need to talk to investors, but I'm not really buying anything. What do I do with this?
Yeah. So they're existing investors, call them, check in, ask them how they're doing,
Yeah,
say hello as a friend and as an investment partner, right? So these are actual real relationships that you're building here. They're not just a financial investment partner for you, they're a real relationship. So
yeah, yep,
calling them, checking in, say, how's it going? Hey, do you have any questions about your existing deals? Or hey, really exciting. We just hit, 95% occupancy in that property you invested in. I'm just wanted to share the great news and check in and say hello and just wondering how you're doing. So keep it casual,
yeah,
keep it friendly. If you have any good news or even bad news, give them a call and just let them
yeah,
know. That's a great way to keep the conversation warm. You're not calling them to ask for capital, and you're still saying, hey, I care to take the time out of the day to talk to you, even though I'm not asking for more money. It's like we're long term partners here. I'm going to keep you in the loop. So just keep it casual. And if you're ever in their city, my favorite way to keep them engaged is, hey, we know we're in town this week. Would you like to have lunch? Meet up for coffee, whatever that looks like. Meet them in person as much as you possibly can.
yeah. And I think if for one somebody's giving you money, that's a big deal, and two is that they I think they genuinely want to know about the deal they're invested in. They want to
For sure.
know, they want to hear some dumpster fire stories a little bit, nothing,
Yep.
nothing too crazy, but I'll tell you that we had a few parks flood during the last hurricane, the two hurricanes that came through at the same,
Hmm.
within 2 weeks of each other. uh,
Yeah.
and that was, obviously not fun. And then, but hindsight, you talk to the investors, and it's like something out of your control, but at the same time they just want to hear that everything's okay, or what you're doing to improve it, or just to really just talk about it. And it's like, to tell them that everything's okay is you want to just give them the truth, is really what it comes down to. And I think that people respect that, and that's been at least my feedback, or the feedback that I've received. So cool. So you have, you're all booked up, and where's, Lauren moving from here?
Gosh, so yeah, it's going to be an exciting year at the firm. I've got some really interesting projects underway, some new verticals to the company, which I'm looking forward to. Got some new marketing materials in the works, which are going to be big, and then just looking to expand this year. Hired my first part-time project manager this year, which was exciting, and hopefully that'll roll into a full-time role here soon. And yeah, would love to just increase my capacity to take on more clients and help more people raise more capital.
Awesome. And so I forgot to even mention all the is where do you so it seems like everybody's kind of in the close, there's a little bit of acquiring. Where do you think the market is right now with like multifamily or, just a general market?
From an investor's perspective and
Yeah.
and their pulse
Yeah.
on it, it's interesting. I've seen some really, really interesting deals pop up with fixed rates, maybe assumable loans, something that's gotten themselves into trouble, maybe some heavy value add that are just really solid deals. And investors are interested in those. They're still funding those pretty quickly. If it's a true solid deal with really conservative promising returns, they're jumping in. If it's an average deal, like we've seen just generally speaking over the last couple of years, they're kind of hesitant. They're like, maybe if I really like and trust the operator, I'll jump in on this. But I've seen this, 7 pref or 8 pref or whatever it is all over the place, right? So
Yeah.
unique deals and really solid deals are still being funded quickly. The little more average deals are taking a little bit longer. It's been an interesting sentiment too towards funds versus single deals. That's been a pretty big topic of conversation for investors. And I think depending on the investor base of the firm, right, it's the first thing that matters if your investors want that or not. But a lot of people have been shying away from funds and are more interested in single deals, just on a generalized, statement there. But they want to feel like they have a little more control over the asset. They don't want to be investing in something that's, quote, blind until the whole fund fills
Yeah.
up. And they just want to feel like they have a little bit more pulse on things. So unfortunately, a lot of people got burned in the last couple of years.
Yeah. And it's funny because it's just like the stock market almost because you think about like everybody wants to be in equities until it gets a little bit of, I guess, volatile.
Mhm.
And then everybody moves to bonds. And now it seems like there's a lot of debt funds showing up.
Yeah.
And which I love the debt funds. It feels like mailbox money. I mean, I guess as a limited partner, it's always mailbox money, but at the same time, as long as you're in first position, it seems pretty safe overall. And it seems like that's become the more popular thing as of right now. Everybody's moved from like apartment, multifamily to more of like first lien debt fund type structure.
Yep, seen a lot of debt funds. People do like those because, usually the reason they are investing passively is for that mailbox money, and that
Yeah.
debt fund kind of takes the place while those equity deals aren't producing as much as they used to, at least most of them. And pref equity funds have come about recently too, which are, a little bit newer for the LP syndication space as of the last couple of years, which some people feel very strongly about and others are, you know, some like them, some don't, I guess. But
Yeah.
yeah.
So pref equity would be like kind of like second position with a little bit of upside. Is that what that is?
Usually, yep, yep. So usually it's right behind any bank debt.
Yep.
It's above common equity. Um, Sometimes it takes place of, capital call or calling it a capital call, something like that. But sometimes it doesn't. Sometimes it's truly just a kind of a second position equity just behind the bank debt or whatever else is on there. But yeah,
What do you think? What do you think people? Because I've seen that also, and it kind of sounds like some of it sounds bad because you're like, okay, you're bailing somebody out, is what it sounds like. But I don't know. And there's certain people that obviously they can't raise more capital from the current investors, so they need to start a whole nother tranche to not water down the original investors. I guess is what's
Mhm.
happening. What is the thing that they should be really looking at as like the pref equity person?
Yeah, I would look at exactly those things. Why are they raising those funds? Is it
Yeah.
because they had a capital call that they couldn't fully fund? Or is it truly because, or maybe it's, the syndicator was selling some of their shares and they needed a new tier? There's a couple different things, but I would look at why they're raising the capital. If the other investors are being watered down, if their ownership is, or what the ownership looks like for these preferred equity investors, those would be the three things I would look for first.
Wouldn't it be like impossible to not be watering down the original investors?
In theory, yes,
Yeah.
unless again the GP was maybe taking some of their shares and leaving the original LPs alone, something
Uh,
like that
so they're
could potentially be.
protecting their original investors while sacrificing their own equity, which would be the very good thing to do of them. Of course, you're protecting your investors' capital. Obviously, would have more longer term value for that operator.
Right. Yep.
Cool. So, where can people find you?
People can find me at equity-elevated.com or at Lauren Brychell on any of the social media sites.
And what type of person would reach out to you?
So usually the type of person reaching out to me is someone who's raised capital before, but they're overwhelmed with the heavy lift of it. They don't have a full team to support that side of the business. And so they come with, hey, I need help. I'm disorganized, or I just don't have enough momentum going on here and I need someone to build it out for me. And that's where I come and step in and kind of act as a fractional investor relations person for their team and really dive in and do whatever needs to be done to get them spooled up on the capital ecosystem side.
Awesome. Well, thank you, Lauren, for being on the show. It was great to have you.
Thank you so much, Glenn. Thanks so much.
All right. Thank you.
Thank you for listening to the Millionaire Journey podcast. Please rate, like, subscribe, leave a comment, and share with somebody you think would enjoy listening.